Hello friends, a very warm welcome to my channel. In today's video, we are going to talk about a company called Waaree Renewables Technologies. So this is a company which is an EPC player in the solar theme. As you know, this sector has been into the limelight for quite some time now. And the government's focus on this sector up to 2030 is very clear. And this creates a lot of tailwinds for the companies operating in this sector, as there are sizable amount of orders released by the government as well as the private sector. And Waaree Group is one of the pioneers and one of the strongest in the solar EPC system in India. So one of their group companies is Waaree Renewables Technologies, which we are going to talk about in this video. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos which I upload. And if you're not a part of our Telegram channel, do join today by clicking the link in the description button, as every day morning before the market opens, I share my view on the market and I also share some strategies which will help you manage your portfolio much better. So let's begin the analysis of Waaree Renewables Technologies. I'll keep the video very crisp. We'll talk about the business model in simple words in the beginning, then we'll see the stock performance. We'll see the main financial parameters, the reason why the stock has corrected heavily in the last few months. We'll talk about the outlook which the management is giving for FY25 and beyond. We'll look at the valuations of the stock at present. We'll understand the risks of investing in a solar EPC business, and then we'll form an overall view on the company. So Waaree Group has been into the renewable energy space for more than 32 years now. So you can imagine that they are far-sighted people who ventured into this space quite early when nobody was talking about it. Up till now, in the EPC segment, this company has already executed more than 1.5 gigawatts, which is about 1500 megawatts of projects. So they have a substantial experience in executing solar projects, which gives existing and new customers a lot of confidence to give them bigger projects as well. When you talk about EPC, they are also into the solar pump space, the rooftop solar as well as floating solar projects. And in-house, they have more than 300 employees, and on project to project basis, they take people whenever they execute a particular project. Now, what is the advantage of this group is they are building a complete ecosystem in the renewable energy space. They are into module manufacturing, cell manufacturing, they are doing EPC, they are entering into the battery energy storage system, they are also open to get into green hydrogen. So like this, they have a group of companies under the same brand name which do different works. Like this company which we are talking about is doing EPC work. So that's the advantage for any customer to work with this group, as the entire product range is also available in-house if he chooses to use the same brand. Now in EPC, there are two ways in which a client can give orders to this company. One is they give a contract wherein the company will pay the entire money, including the modules which are to be fitted on the site. The second way is the company pays only for the service of construction and erecting, commissioning of the solar plant, and the client buys their own modules, or the modules cost becomes a pass-through for this EPC company. So in such cases, if the module prices go up and down after taking the order, the price margin is not impacted for Waaree EPC. But whereas in a contract where they are taken a lump sum contract, if the module prices go drastically up after taking a contract, then the profit margin may be impacted. So right now, out of their overall orders, about 30-35% is with modules and the rest is without modules, where the price of the modules will not impact the margins of this company. Now on an average basis, as we will be using the term megawatts and gigawatts frequently during this video, to simplify, I have mentioned the calculation in terms of to convert megawatts into rupees. So for each megawatt of EPC project, this company does a revenue of about 1 crore to 1.2 crores. So equivalent calculations you can do as you go forward. Now these are the different areas in which this group functions. They are into manufacturing of solar modules. They do rooftop solar solutions, off-grid inverters, then solar products like water pump, street lights. Ground-mounted solar structures are to be done on the EPC sites, then floating solar projects are also capable. They are venturing into energy storage solutions, which is BESS, and rest of the EPC services and the others. So as we have discussed, they are building a complete ecosystem of the renewable energy space. Now these are the reputed customers with which this group has been working. So this also gives a lot of trust for a new client which is evaluating this company for a new project. Actually, this company has a history of a reverse merger. There was a company with a very low market cap or a penny stock which was bought by this group, and their other business got reverse merged into this, and then the stock prices started to go up, and as the projects increased, it shot up to as high as 3,000 rupees. From then onwards, in the last few quarters, people realized that the execution is not up to the mark. The company has overcommitted and under-delivered, which led to the correction in the stock price which we see now. And right now the stock is trading at somewhere around 1350 rupees, which is a temporary support zone for this company in terms of moving averages as well as candlesticks if you see on the chart. Now when you look at the main financial parameters, the revenue has shown a steady jump year on year from just about 6 crores in FY20 to 876 crores in FY24, but going forward we have to see how this plans out. EBITDA has also shown a substantial increase to almost 200 crores in FY24. Margins have been volatile for this company, but the management is guiding for a sustainable margin of upwards of 15% at the EBITDA level going forward. The debtor days are about 155 and the payables are also on the higher side. So this is a working capital intensive business. They don't have any major fixed assets to be purchased, and their money usually gets stuck in the working capital. So efficient management of working capital is very important for this company. Now what led to the fall in the stock price? As I mentioned, the execution was lower than expectations in the last 2-3 quarters. And in terms of order win in this quarter, which is Q1 FY25, I realized that the order wins have not been so substantial. At one point of time, this company was trading at almost 200 times the earnings, which got derated because the execution was lower than expectation of the investors community. And every day I see the companies which are already into EPC scaling and new companies which are not into this business like HG Infra are also diversifying into the EPC space. So as the competition intensifies, then the valuations may not be as rich as they were given before. Now, when you talk about the growth outlook from FY25 and beyond perspective, the company wants to focus more on the projects in India itself, but they are open to taking up projects outside India. They are willing to take up both government as well as private projects, and now as they execute more and more contracts, then there is a high chance that the company who is their customer gives them back the project for O&M, which is operation and maintenance also. So in the next 1 year, the company expects the O&M size to go to as high as 2 gigawatts. They are also open to take up O&M projects which others are maintaining right now to increase the revenue in that segment. Now, how will this company differentiate their O&M service compared to others? They will use some innovative technologies like drone thermography. They will be giving their customers analytics of how their solar plant is running, what is the output, how efficiently can it be managed or improved. And if there are any faults in the project, then the system can highlight it. So this kind of technologies, when they use, they will differentiate themselves with their competitors. As on date, their non-executed or unexecuted order book is about 2191 megawatts. And as we have discussed in the earlier slides, their per megawatt revenue is about 1 crore to 1.2 crore. So you can do the math yourself. And on a conservative basis, they are expecting margins of about 15% and above at the EBITDA level. Out of this 2191 megawatt order book, they plan to execute at somewhere around 1800 megawatts in FY25. So that's the outlook of the management in this year. There were small order wins in the newer products, like they won 1 megawatt order for setting up a green hydrogen project. And the small portion of a revenue of this company also comes from their own IPP solar projects, where they own the entire project, generate the solar power and use it for themselves or sell it outside. So that is of the size of just about 40 megawatts approximately. These are some of the projects which the company is doing right now to give you just a glimpse of what they do. Now, when we talk about the valuations, the stock is trading at somewhere around 100 times the earnings, even after correcting so much from the top, and the price to book value is almost 70x, because this business model does not require much of fixed assets. So the book value of such companies is generally lower. So at these kind of valuations, the stock is not very attractive from a investor's perspective. Now, what could be the risk of investing in an EPC company, or specifically Waaree Renewable Technologies, is if the government changes their vision in the solar sector, or they change the policies, or they open foreign players to enter India, or any such change that can drastically impact their business. If the raw material prices of wafers, modules, cells change, then there is a possibility that their margins can be impacted, the projects can be delayed, which has already happened in the past. As more and more players are entering in this and the existing players are scaling up, so the competition is expected to intensify in the next 2-3 years. And if the company gets lower orders going forward, or their execution becomes slow, then that could be a risk from an investor's perspective. Now that you've understood the business model of the company, the financial parameters, the growth prospects, the risks, now what is our overall view on the stock? So if you're already holding this stock from a lower level, then it may be too late for you to sell right now, because the stock is already corrected. So you should monitor the results for the next couple of quarters and see if there are signs of improvement. In Q1 FY25, the results were not that bad, and from this, If the momentum picks up, then you should continue to hold. But if you're looking at a fresh entry in this kind of a stock, you should also compare this with the other peers in the industry, and there are some peers which are available at a more attractive valuation than this company. So from an overall perspective, you can evaluate, and still if you're very keen in investing in this particular stock, then you should closely monitor the execution and then accumulate gradually, as the valuations are not very attractive at these levels. So that's about Waaree Renewable Technologies. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. Do join our Telegram channel by clicking the link in the description button. It's a free channel. Thank you for watching and have a wonderful day.